Palantir. We didn't get to talk about it. Palantir.
Love it.
Do me a favor. Go to their earnings call. Start at minute 29 when Alex Karp is talking. They are the original AI software data analytics firm. We know them from their military contracts. Their commercial business is exploding to the upside. They're rebuilding the company. This is very exciting. So I think it's got a really long room to run. It's under-owned. I think misunderstood.
Analysis, prospects, and sentiments. It's hardly a secret that Palantir Technologies has been making waves in the stock market recently. With a nearly 200% rally over the past year, Palantir has captured the attention of investors and analysts alike. However, amidst this surge, there are conflicting views among analysts about the company's future. Is Palantir poised for continued growth, or are there storm clouds on the horizon?
I think that's really what Karp's built. And in my opinion, it's still undiscovered as just a broader AI play, which is why I believe they're the Messi of AI. I think there's a golden path right now for them to monetize what we view as potentially $1 trillion market opportunity. And I think investors still have not recognized what this golden goose could be.
Yeah, I mean, as we just mentioned, the stocks moved pretty ferociously here in the last couple of months and since the start of the year. When you think about some of these newer AI applications in real time, they're already being applied on the battlefield. Case in point, Ukraine. Palantir is a key example of that.
Just last week, Palantir stock took a hit, dropping over 1.6% in pre-market trading after receiving its first Wall Street downgrade in over a month. This downgrade came from analysts at Analysts, Crespi, and Hart, who shifted their rating from neutral to sell. They cited concerns about Palantir's valuation, which they described as egregiously rich following its impressive 200% rally driven by AI advancements over the past year. The brokerage firm set a 12-month target price of $20 for Palantir, indicating a downside risk of nearly 20% compared to the stock's last closing price. Analysts highlighted several challenges facing Palantir, including inconsistent government contract revenues, uneven execution, and a high valuation. They also noted the looming economic downturn, suggesting that the company may struggle in such conditions. In terms of valuation, the analyst team identified Palantir as having the highest valuation within their enterprise software sector, with a trading ratio of 17.0x times their forecasted 2025 revenue. This valuation is nearly 3 times higher than the sector average, excluding Palantir. Despite this premium valuation, Palantir's expected revenue growth for 2024 is only 20%, lower than its peers Snowflake Incorporated, Datadog, and MongoDB. Furthermore, the analysts expressed concerns about the excessive number of shares outstanding, suggesting that it may take years for Palantir to grow into its current valuation. They compared Palantir's revenue estimate per diluted share to the industry average, highlighting the discrepancy. Despite these challenges, Palantir has seen significant stock price surges, notably outperforming the wider market. The company's pivot to generative AI following OpenAI's ChatGPT reveal in November 2022 has contributed to this growth, reflecting broader industry trends. But aren't you curious about what other experts are saying about Palantir Technologies amidst all this market chatter? In the latest quarter, 11 analysts weighed in, offering a mix of bullish and bearish perspectives. This variety of opinions gives investors a glimpse into the evolving sentiments surrounding Palantir. Looking at the recent ratings, it's clear that analysts have differing views on Palantir's future performance. Some have raised their ratings, like Mariana Perez from BofA Securities, who upgraded Palantir to buy with a price target of $28. Conversely, Brian White from Analysts, Crespi, and Hart downgraded Palantir to sell with a target price of $20, expressing concerns about its valuation. When delving into the 12-month price targets, analysts' estimates range from a low of $5 to a high of $35, with an average target of $21.55. This wide range reflects the varying perspectives on Palantir's potential trajectory. By analyzing these analyst evaluations alongside relevant financial metrics, investors can gain a comprehensive understanding of Palantir's market position and make informed decisions about their investments. Palantir has long been recognized for its data analytics software, catering to both government and commercial clients. Despite its solid position for growth, the emergence of AI as a major trend has accelerated Palantir's prospects. The launch of its artificial intelligence platform around a year ago led to a threefold surge in its shares. However, while some view this as justified growth, others see it as overhyped speculation. Yet, despite differing opinions, the company's fiscal results underscore the substantial progress made in the AI realm.
And that's why I think in this AI gold rush, what I view as the fourth industrial revolution, of course it's NVIDIA, Microsoft top of the mountain with Nadella. You look at second, third, fourth derivatives, right now Palantir front and center. And that's why I think this is a stock you look at our bull case model, I think this is ultimately $25, and I think as they execute, more investors start to look at it.
Now, let's analyze why investors are skeptical about Palantir's future might be missing the mark. Similar to NVIDIA's dominance in AI chips, again, Palantir holds a similar advantage in AI-driven data analytics software. Despite increasing competition, particularly from larger enterprise software companies, Palantir's early adoption and superior technology position it favorably. Secondly, the company's client growth signals further acceleration in its expansion. Last quarter, commercial revenue grew impressively, with an even more notable increase in commercial customer count, suggesting sustained momentum. Additionally, the adoption of AI could catalyze growth in governmental software sales. Lastly, while current forecasts indicate moderate earnings growth, there's potential for outsized growth in the future. This possibility arises from Palantir's ability to control its growth trajectory, suggesting the potential for substantial earnings growth in the long term. These factors suggest that while skepticism exists, Palantir's growth story may still have significant upside potential. But before we move on, we just want to thank you for watching this far.
Growth. This is a hot sector right now, but for how long? We think it's a long-term play. We think it could easily be 18 to 24 months, and we're going to far surpass that number.
Moreover, other analysts see Palantir as an intriguing investment opportunity after its recent surge. They highlight the company's potential for further growth, especially in sectors like government and security, where AI-driven solutions are in high demand. Some investors view Palantir as a more affordable alternative to larger tech companies like Microsoft, particularly for those interested in AI investments. They believe that Palantir's stock could easily grow 18 to 20% in the near term, with even greater potential in the long run. Analysts also point to Palantir's strong performance in the market, with its stock price tripling in the past year. Despite some short-term fluctuations, they remain optimistic about its future prospects, citing the company's solid fundamentals and its position as a leader in AI-powered data analytics software. They emphasize that while there may be some volatility in the short term, the underlying trend suggests continued growth for Palantir, especially as it expands its client base and explores new opportunities in emerging sectors. Looking at the stock chart, analysts note that Palantir has experienced periods of consolidation and sideways trading after periods of rapid growth, indicating healthy market behavior. They see this as a bullish sign, suggesting the stock is building momentum for its next upward move. Additionally, they point out that Palantir has broken out of a previous downward trend, further supporting their positive outlook on the stock's future performance. So, as Palantir faces a downgrade from Monnes, Crespi, and Hart, investors are pondering the company's growth strategy. Unlike traditional businesses focused solely on maximizing profitability, Palantir is prioritizing revenue and market share growth, which may not sit well with some investors, particularly those who emphasize metrics like price-to-earnings ratio. In contrast, Palantir's long-term approach could pay off handsomely. By deferring earnings maximization now, the company aims to establish a strong foothold in the market, setting the stage for substantial earnings growth in the future. This strategy could potentially justify a significant increase in Palantir's stock price, perhaps even surpassing its previous high-water mark above $35 per share. Despite the recent downgrade, other analysts remain bullish on Palantir's prospects. Wedbush, for instance, raised its price target on Palantir to $35, citing positive momentum with its artificial intelligence platform and growing cross-sell opportunities. However, it's essential to consider the broader range of analyst opinions, as the average price target on Palantir is $19.29, indicating potential downside from current levels. So, should investors bet on Palantir's growth trajectory or heed the cautionary notes from some analysts? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you're wondering if Palantir could reach a $1 trillion valuation, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.